What's up, YouTube? It's Joe Cacciapaglia sitting on the couch making some money investing in fractional real estate online as usual. Today is Friday, so it's time for this week's installment of this 52-week challenge. If you don't know what that is, that's just when I share all of the fractional real estate that I bought this week, and I invite you to do the same. You can do it in the comments to this video, in the Discord. You can DM me. Some people have found my email now. You're welcome to do that if you find that online. All we're trying to do is kind of have a virtual accountability group where we're, not getting stuck just analyzing lots of properties and not buying stuff. The goal is to just, purchase one thing, at least one thing every week, not be stuck in analysis paralysis. And, that's the whole reason I'm doing this. And I'm going to jump. Oh, before I forget, please like and subscribe. In the description of this video, I have links set up to all the places where I'm currently investing in fractional real estate online. Some of those links are affiliate links. Just because I invest on those platforms doesn't mean that you should. Some of them I'm in the process of taking money off. I've tried to be as open as possible about everything I'm doing on there. So do your own due diligence on all the platforms and all the properties you see me talk about. I'm trying to share my ideas and thought processes on the way I'm going about looking at these platforms, share my experience with them. But at the end of the day, you have to decide if they're the right, deals for you when you're buying them. Also in the description of this video, there's a link set up to a Discord channel where now hundreds of fractional real estate investors go and talk about lots of different platforms. More and more, the discussions are just driven by other people, not me, which is fantastic. That's my goal. I do check in on that every day, but there's a lot of people talking to each other about, due diligence on different platforms, talking about different, all sorts of things. And that's the goal. So please feel free to join that. It's not a sales funnel. It doesn't cost anything. And I will not DM you trying to sell you services, investments, or advice, coaching, anything. So if you get those DMs, those are from imposter accounts, and please report them. Okay, back to what I bought this week. It's going to be a very short list for me. I bought a couple more tokens in 9 Country Club Lane. I bought this on Lofty. You can see I always look at my Lofty properties in Lofty Assist. I just like the format better. This is a short-term rental in Briarcliff Manor, New York. I'm buying it based almost entirely off this incredibly low price relative to what it was brought to the platform on. But also, the discount from $50 on Lofty, so this is on Lofty, it's never what's important, right? You have to look at what do you think the discount is of the equity of this property, right? So, the valuation minus whatever the debt is, relative to the token price. And so, yes, I don't necessarily think $50 ever made sense for this property at $21.75. And I actually think I bought them a little below that. I'm very happy to buy more of this. I think that there is, Earl is the manager on this. Noah is the co-owner. He brought the property to the platform. He's, interacts with the guests. He's doing a lot on that end. And I think that they have a good plan. They have a lot of efforts to make it a success. If that happens, I think the token price moves back up and I'll sell the tokens. If it doesn't happen, I think that this is one, it's going to be hard to get hurt at this price point. If sometime in the future we have to sell, I think the equity is going to be worth, maybe 1.5, maybe 2 times what I'm paying for it. So in either case, I'm pretty happy with it. Obviously, there's always the risk that these go to zero, especially on all these, I think of all the platforms I'm investing on, Lofty has the most properties that I believe my investment in could go to zero. I think, one, because it's one of not all the platforms have debt. It's one where the debt is, a little bit more opaque than some of the other platforms, meaning we might see the general details, but they're, it's taken care of by a co-owner. Although this one, I think the Dow is actually making the payments on this one, although it's in Noah's name, and he is, I believe, and I could be wrong, but I think he's backstopping it if the Dow can't pay for it. I should really know that. I know I did when I did my math on it, but that was a while back. And that's what I do on Lofty, right? I do my due diligence up front on the property one time. I figure out a price where I'm happy to buy into it. I try to keep up in the Discord and see, what's happening, if there are issues or not. But other than that, I'm just looking for when the price is at a certain point and I have cash in my account, I'm just buying. I have been moving cash off of Lofty, like I did when Leclerc sold. But when I am reinvesting my rents and occasionally selling some tokens when the prices move up and I get a good profit and reinvesting that in other deals. So that's how I bought this one. I had another DAO where I think I bought it at 26 and the price was up to 34. That's a nice hefty profit in a short period of time. So I went ahead and sold one or two and then picked up some of this one. The next property I bought was a few more tokens in this Umland Circle in Jenner, California. The price had dropped into, I think, $12, which is below my current average basis. And I decided to pick up some more. I think, this is one, it doesn't really make a lot of sense as a short-term rental. I don't think it could cover its debt if the co-owner wasn't the one responsible for it. I know there's been some questions on, is he going to continue to pay the debt? It's been behind at certain points in time. Whether it still is, I don't know. There's been issues with being able to afford a backwater bill. Lots of problems with it. This is me really making a bet on the equity, even if we had to fire sale this, is going to be more than I'm paying at this really depressed price per token. And that's all I'm doing here. I think there's a couple different situations that could happen. It could, things could turn around. The co-owner's financial situation could change in such a way that he's able to just pay the debts and we have no worries and this moves along, and someday in the future, the property appreciates. It doesn't throw off very much cash flow, but we're happy until then holding it, getting this, it's not truly a levered appreciation because we're not the ones holding the mortgage, but we in a way get a levered appreciation because we bought at such a discount, right? If this is actually a fraction of what the true value is, and I believe that. I believe even in a fire sale situation, I think we're not getting $0 today. And if we're able to market it, we're able to list it sometime in the future. I think, this is one that I believe there's a double in the future on this one or more. And that's, to me, that's worth taking a risk on it because I think it is a good piece of real estate, even though it's not necessarily a good investment property. Obviously, I could be wrong about all of that. So you want to really think about, I'm not putting money into this deal that I'm not willing to lose, right? I think it's an asymmetric bet. The upside is probably greater than the chance of it going to zero. The chance of it doubling, I think, is greater than the chance of it going to zero. And I think it could more than double in the future. So there's that opportunity. This is, obviously these deals I'm doing on Lofty, they don't look anything like traditional real estate investing that I'm doing in real life. But Lofty was very profitable for me last year. And as long as it doesn't completely collapse, I think that I'll continue to find these little opportunities to buy to buy equity, to buy $1 of equity at 50 cents. And if I can continue to do that, these are all small deals, right? I don't have a ton of money on this platform, but it's something that it's fun to experiment with. I'd like to see them, turn things around and really make this a site that people feel safe to put their money on. If that ever happens, I think all the tokens that we hold would go up in value significantly. And, as much as I've been frustrated with Lofty over the last, about a year now, I believe that it wouldn't take a lot of changes to make the platform something where people actually felt safe to invest their money, to where they could attract capital again. Like if you look at Mogul is selling out of properties left and right. They're raising, hundreds of thousands or millions of dollars in equity capital, already just in the last several months. And I think it's because, they've proven themselves to be savvy business people. They are they're vetting properties. It's a different type of platform, but I think the big difference is the level of trust, right? Like there's not the same fear that we're getting scammed by a co-owner, or Lofty's lost our money, or they're going to make a decision arbitrarily that hurts us, whether it's freezing trading on something with no warning, or all sorts of different things that could impact us. I think if they got to a point where a lot of the fear of those sorts of things went away, we could see tremendous upside in tokens. And so that's one of the reasons that I haven't taken all my money off of there, right? I think that I'm willing to lose what is on there, and I think there's plenty of opportunity to get great returns if things just sort of keep chugging along the way they are. But if they are able to really improve the way they do things, which I don't know that they will, because a lot of times you see people try to give them feedback and they sort of just try to explain why they did what they did or argue about it, versus like actually, it very often doesn't look like they really want to understand like how they could have avoided problems and maybe how they could avoid some things in the future. Anyway, I haven't had a good Lofty rant in a while. I think watching their webinar the other day, or their town hall or whatever it is, kind of got me in that mood to want to talk a bunch of. I'll probably do a separate video because this is not the place for it. Let's get back into what we're doing today. What I bought this week. So this is the second thing I bought on Lofty. And then the only other thing that I bought for fractional real estate was one LRO on ground floor. This is, again, it's the only one that came up. I still have, I had one payoff, so I'm still only have 119 loans in total. It is, I'd really like to get to a point where this number is growing, but they just haven't had very many offerings, and I've had, pretty consistent payoffs as well. I still have 0 loans in default status. So I'm getting, I'm getting a good return. I've some more extended, but I think that, I think I actually had an extended one pay off this past week, and that was the one that paid off, and then I bought a new one. But yeah, if now I think I talked about this last week, but I've doubled the amount that I'm putting into each one. So now just $100. If this number can start to climb, and I'm planning to put more money on this platform in the future, as long as we don't run into another situation where they have that artificial payoff that I talked about several times on this channel. If they don't do that, and I don't start to accumulate a lot of defaults, which again, I still have had 0, which is mind blowing to me. I mean, I've been, because I know some people have had a lot. I've been on here now for getting pretty close to a year and a half. I think it was September 2024 when I started. So I've had a lot of loans go full cycle. I do think that when they did that artificial payoff to move loans, out of the LROs and into other products, that maybe they took away a lot of my loans that, that would have defaulted. Like if you look at all the closed, like a lot of those were extended, right? 80 versus 108 that performed. Like it's a very large number. So maybe they took away all the troubled ones. I really don't know. I don't know what's going on there, or what happened. But if it continues to work the way it's going, I mean, I made about a 10% return last year in total on a cash basis, right? Based on the amount of money I had on the platform and how much, interest I actually got paid out. The rate on my loans is actually a little bit higher on my average when that paid off. And I think that, I'm going to just keep doing this. It has been my most consistent performer across all the platforms I'm investing on. So I don't know, maybe I was a little rash taking money off, but when it happened, there was just nothing on here for me to put more money onto. And that's what I worry about, right? Like one of the things, if I'm investing in a platform, especially if it's one where I'm looking for a steady cash flow, having them turn around and be like, oh, here's your money back, and we have nowhere for you to put it, knowing that they can do that at any time, makes me much less secure in using this as, as a tool for, if I, for example, if I have a lot of private, or, not a lot, but I have private mortgages in real life where I collect interest. where I bought a property all cash. I sold the property, and I'm taking payments over time. And that's a really, dependable, steady source of income. But it requires me to get off the couch and go do things in real life, like find those properties, buy them, find a seller, and I don't like to do that. And so part of my exploration of fractional real estate is to make it so I can do all of my investing online, but use, having the advantage of using my real estate knowledge and experience when I do it. And so this is one of the things, that I was really excited about early on. That sort of ruined it for me because, when I invest in debt, I want it to be very dependable cash flow, right? That's the only reason that I would accept debt level returns versus equity level returns, which I want to be higher. If they're not able to produce that, right? If it's not a stable, predictable investment, then then I don't know how it fits into my overall plan, right? And so that's basically my issue with that. It's also my issue with debt funds in general, right? Like, in which this is not, right? But it is. I'm getting just lots of tangents today. I need to make some other videos. You can tell I am behind on a lot of stuff. Oh, I do want to mention, I'm going to change the format of my due diligence videos, because right now I have 2 that I'm working on and I'm behind on, and properties are just coming out on lots of different places. And I'm obviously just at the moment don't have the time to allocate to do full length due diligence on all of them. So what I think I'm going to start doing is, hopefully you guys can start giving me some specific questions about properties, and I'll do videos addressing those specific questions when new properties come up. And then maybe also just on my own, pick some, look at the properties and then give you some, just discuss one small issue with it, whether it's just the valuation or just the income, just the crime, whatever it is, whatever I think is sort of interesting about the property. So I'm curious if you guys think that's if you'd like that or not. I mean, I don't know how many people actually watch, my full 45-minute due diligence videos anyway, or if you're all just skipping to the end and seeing if I'm saying I'm buying it or not. I don't know. But I would like some feedback on that. Feel free to, mention it in the comments or jump in the Discord and tell me. Putting this question at the end of my what I bought this week video is probably dumb. I don't know. Anyway, that and lots of other things. Like always, until next time, I'm going to just keep making mistakes so that you don't have to.